What's up everyone, my name is Joris. Welcome back to my finance channel. If you have read up on investing and are around for a while, you have probably heard the saying, be fearful when others are greedy and be greedy when others are fearful. Words made famous by one of the best investors of all times, Warren Buffett. Late John Templeton, also a great investor, once said that the time of maximum pessimism is the best time to buy and the time of maximum optimism is the best time to sell. Two very similar quotes by two of the best investors the world has ever known. There has to be value in their words, right? We should like these quotes for the YouTube algorithm. So, should you just buy when everyone is selling and sell when everyone is buying? Is investing really that easy? Well, yes, it kinda is. But of course, this idea is completely counterintuitive. Why would you want to sell if everyone and their grandma is buying stocks? Stocks only go up, right? And why would you buy in the midst of a stock crash? Stocks will continue to drop and the end of capitalism is right around the corner. The idea of Buffett is as simple as it is genius. Buy when people are selling and sell when people are buying. Just go against the flow. The stock market movements are greatly based on emotions, and stocks that fell into disgrace will keep dropping and will be reduced to zero. At least that's what Mr. Market thinks at that moment. The investor's emotions come and go as the market fluctuates. And investors will often follow the herd and make wrong decisions along the way when building up their portfolio. You can learn all you want about the stock market, the valuation of companies and the global macroeconomy in countless of books. But if you don't learn to control your own emotions when you're investing, you will lose in the end. And this is why it's very important to start investing at a very young age. You will make mistakes. Everyone will make mistakes. And it's better to make them when you are still young. You still have a lot of time building up your wealth. So your losses at that moment are very limited. If you start out later at a later age and you make the same mistakes, you will pay dearly. Or worse, you will just give up and stop investing altogether. I have read some great books about the mind of investors, Thinking Fast and Slow by Daniel Kahneman, and of course The Intelligent Investor by Benjamin Graham. Both these books offer great insight in the minds of investors and how to notice these emotions in yourself and act on them accordingly. When everyone goes left, you should go right. It is very hard to see when markets are euphoric or very fearful. Of course, if you read and hear everywhere you should invest and you hear buy, the markets are probably euphoric. Here in Flanders, we have a saying that if our barber starts talking about which stocks to buy, it is really time to leave the market. But unfortunately, we don't go to the barbers every week. So when is the actual time we have to look closely to the emotions of other investors? Luckily for you, I recently found a nice gauge on the emotions on the stock market, the Fear and Greed Index by CNN. It shows us where we are located on the spectrum right now and where we came from. The index is further divided in 7 indicators, all referring to a separate aspect of the market that will influence stock markets and their prices. Some of the indicators are the junk bond demands, the market momentum, safe haven demand and the market volatility or VIX index. All these 7 indicators together form the Greed and Fear Index, and that gives us a nice view of where we are right now. I will add a link to the website in the description below, so be sure to check it out. Now, don't take this tool for granted. It is not a clear indicator on when to invest, but it is an extra indicator you can use whenever you're thinking about investing. If we look at the previous 2 years, the Fear Index shoots up in periods when the market also goes down. I'm pretty sure that the index will follow the markets and not vice versa, so it is really impossible to use this indicator as a viewing orb to look at the future. But it can be useful to spot out periods of extreme fear or greed in the markets, and you can act accordingly. The best way to invest for your future is still to simply invest monthly and consistently, but if you happen to have a little bit more money than you'll need, you can add these amounts to your normal contributions in periods of extreme fear. But don't try to sell off your whole portfolio when the markets are getting hot. The buy and hold strategy for well-diversified portfolios will always outperform timing the market. So don't use this tool as an indicator to go full in or full out of the markets. Just use it to invest wisely when possible. I personally use the indicator to invest a little extra in the market when the fear indicator is very high. In March 2020, we had a period of extreme fear, and I used this opportunity to invest a little bit more, a little bit extra on top of my monthly investments. As it stands now, the tool is set on average. There are no real issues on the stock market, the economy is regaining traction, but the stock market valuations are rather high. All in all, a great time to invest every month. If you've enjoyed this video, share it with a friend. Break the finance taboo and start talking about money. If you find the fear and greed indicator a useful tool, please leave a like for the YouTube algorithm. Subscribe to my channel and hit the notification bell. You will be alerted when a new video comes out. And if you want to watch more of my finance videos, you can start by clicking one of them right here. I thank you very much for watching, and until next time.